George, how do you pronounce your last name? Kneiser. Okay, cool. Thank you. Already ready to go? Okay, ladies and gentlemen, welcome to our first session of the day after the plenary. I hope you enjoyed Sir General Richard Barron's with his insights in the future of defense and your role in that and of innovation in defense. Now we're going to start with the program of the startup days in the sessions, and you're here at the so-called reverse pitching. If you're a long-term guest of the startup days, you maybe remember the reverse pitching session is actually part of the history of the startup days. We have done it in the past quite a few times. For the last, I don't know, 2-3 years, there hasn't been a reverse pitching session. However, we thought when we did the program for this year, maybe we should bring it back because people always loved it and we think it's interesting. However, we're doing it in a new format, a little bit different than we did it in the past. As you see already, we have two colleagues in front, not just one. So our reverse pitching is not just the search for the best VC or the best VC pitching, but what we want to do is we want to create some transparency, we want to create some insights, we want to learn from the practice of venture capital together with startups. Therefore, we always invited one VC and one portfolio startup to present together for this pitching session. And as it is a pitching session, we have a very strict regulation here for the format. Each pair has exactly 6 minutes to share their shared experience, their approaches, and so. And after the 6 minutes, I'm gonna come with my Swiss Glöckli, and I'm gonna give you a signal that time is over. And after these 6 minutes, we have 3 more minutes for you in the audience to ask questions. We have a small Q&A opportunity for you. As said, I'm gonna be a tough timekeeper. This is the first of 2 reverse pitching sessions today. The second one is straight after this one at 11:00, exactly in the same room. And today we're gonna have in this first session 5 pairs and in the second session 4 more pairs that you can see. And then I would say, without further ado, we welcome Pascal he's the co-founder of Blumhouse Ventures, and with him is Santiago Droll. He is the CEO of 11 Dynamics. Welcome. Stage is yours.
Okay, thank you. Thank you so much. First, let me give you a bit of context. You know, I met Santiago for the first time in February 2022 over a business lunch in Solothurn. From the very beginning, you know, I was impressed about his drive, clarity, and also entrepreneurial mindset. It didn't take long before we kicked off our due diligence, you know, talking to customers, taking references, digging into the market, and also getting to know the business inside out, you know. And then about 3 months later on, almost finished the due diligence, Santiago came to me and said, "We don't need anyone, we will do it on our own," you know. So Santiago, do you remember that moment? And before you answer the question, you know, I want to give you also a little bit context. Like in this room, there is a lot of founders, you know, and everybody would be thrilled to have a lead investor on board, you know. But that sentence really stuck with me when you said, "Okay, we don't need any investor." Not because it was really arrogant, but because it reflected the deep sense of ownership and belief into the mission. And that's exactly what I think what makes this story so special. So please give me shortly your answer.
Yeah, remembering that, it was about, we were looking into financing and if we need it or not. And in the end, I have 2 co-founders and it was always like, let's own the whole thing and go with it. And we don't really want investors, we want bootstrap. And Pascal contacted me and we had this first meeting and I started thinking about maybe it's a good idea. And I had 2 co-founders who were very against it. They were like, no, let's bootstrap, let's go all the way. But at some point, we had our first pilot at Audi Motorsports and we started realizing that with segment A customers, at some point we're gonna need all the follow-up things. It's not enough to be 3 founders. We're gonna need ISO 9001. We're gonna need TSOX, etc. And we need a bigger team for that. And I think that's when I went back to Pascal and said, okay, let's go faster because there is also competition.
Yeah, so a year later, in January 2023, Blumhouse officially invested into 11 Dynamics, you know. I joined the board, and from that point on, our journey truly began together. We set up bi-weekly mentoring sessions, ran offsites to tackle big questions, held board meetings that went beyond reporting, and met regularly with partners at conferences to support the company's growth. And yes, we also drank a fair amount of beers together along the way, you know. Some of the best ideas may or may not have come after the second round. So Santiago, you know, we shared some challenging moment. We always tried also to help you along the way, you know. So how did we support you over that time, and what value did Blumhouse actually bring to the table within the last, let's say, a little bit more than 1-2 years?
I think several aspects. So for me personally, it was, when we started this, we were 3 founders. We had another employee, and we had nothing. So we were just technical in sales. We had no processes. We had no governance. We had nothing. And getting the investment, we needed to build the company. We needed to be processes and be more structured in that way. And Pascal helped me a lot with his experience. Also proposing a mentorship program. So I'm in EO Accelerator now, and this helped me personally to grow. And it helped a lot for us, his support, and that I always had an open ear if I had questions or insecurities or whatever, that they were there and helped us build the whole structure. So it was more than just money in the end. Money helped to build the team, but it was also help to actually structure the whole thing, grow. And this helped a lot. And I think the second thing that was very important for me that I didn't realize at the time is for follow-up series. If you have Seed Plus in Series A, whatever, the first is the hardest to get, the first investor. Once you have one, there is a lot of network going on. So from the first, you get a second, then you get a reference to a third, and you can leverage that network. So it's actually very good to have somebody who helps you closely, because it helps you to go forward faster.
So one last question before Q&A. You know, you've just closed the Seed Plus round with EquityPitcher, who is also in the room, Seth Kabai, Seed and Speed with Carsten Maschmeyer joining the journey. You just finished your first quarter with 200% above the budget, you know. That's not a small feat, you know. So the board has also grown from 3 people to 5 people. The stakes are higher, and the company clearly is entering a new phase, you know. So what does the road look like from your perspective, and what do you think how we can help you?
Still the same thing, like sharing your experience, you know, having an open ear, that helps a lot. And with the growth of the company, you have new challenges. So for us, it's building teams, building middle management in order to go forward faster, because you cannot do everything alone, and that's something we need to learn and to go forward. And I mean, with these investments, we can go into new markets, we can stabilize the company altogether, and for us it's important to continue leveraging the network. So with the new investors, what you also see is there is a lot of connections into C-level companies, into the industry, and for us it's very important to leverage that and go forward.
So thank you so much.
That's perfect
that,
timing.
I think perfect timing. We are at Q&A.
Yes. Are there any questions for Pascal and Santiago?
So we are focusing only on B2B business models in industry tech, you know, climate tech, as well as B2B digitalization. So things like cybersecurity, stuff like that. And we are focusing on early stage startup. That means pre-seed round, seed round. You know, that's our focus. We do make normally first investments, first tickets between 250K to 500K.
Any more questions?
Santiago, since you were lucky enough to be able to choose the investors, how did you curate your cap table in such a way that allowed you to grow in the best possible way? Did you put any thought into that?
Sorry, again,
into your cap table?
Yeah.
Did you think about what kind of investors you wanted to have?
Yes. So for us, it was always important that we have investors that we click with. So I think it's a lot about gut feeling in the end. So we always have one-on-ones. And for me, it was very important to feel comfortable with the investor in the end, because they're going to have a high stake in your company. They're going to be in the board. And if from start you have a bad feeling with them, I think it's not going to end well. So for me, it was very important, besides making sure to keep a fair amount of the shares such that we still have the control. I mean, at some point that's going to lose, but it was, for me, very important to feel comfortable and to have a personal relationship with the investors.
We have time for one more.
Are your co-founders happy now about the situation to have VCs?
Yes, one is very happy because so my co-founder that is doing sales, he's super happy because we have a lot of leverage that we take from that, a lot of access to the industry, and the other is still growing on it, so but he's technical.
Cool. So, thank you both so much for your time and for sharing your experiences. And next up, we have our next pairing, which is Marco Marugg. He's an investment manager at EquityPitcher Ventures, and we have with him Anina Lutz. She is the co-founder and CEO of Calingo. And your time starts now.
Fantastic. Well, pleasure to be here. I started with a very brief introduction. That you know what we do. We invest 1 to 2 million tickets in the DACH region in all, whatever rounds which fit in that ticket. Very agnostic, no life science, no crypto, but very open for different industries.
Hello everyone, my name is Anina Lutz. I'm co-founder and CEO of Calingo Insurance. We're a insurance startup from Switzerland, from Zurich, focusing on pet health insurance.
Great. Let's dive a bit into how to choose the perfect investor. I'd like to highlight 2 points I think which resonate with me, which I really try to live by. One being really focusing on how you deal with the startup in the investment process, because I think you can really tell a lot already in the investment process. How is these people behaving? How are they personally? How are they talking to you? What are they asking from you? What is the pace? Are they very bureaucratic? And I think this is then really important down the line. And we really try to be super founder friendly. Also have founders, former operators in our team. So really, that is, I think, something maybe the most central to me. And vice versa, of course, right? You can also tell from the other side how it resonates. And the second, I think, from my opinion, it is really a lot also about still just financing as a VC. So can you do follow-on investments? Can you attract other investors to come with you? So still quite at the core, of course, the VC has to finance, but I think it entails a lot, as you said before, that it's not just the money you receive, but it also attracts further funding, and especially then you can do follow-on funding, maybe also internal funding, which makes it much more easier and faster to maybe grow in the meanwhile. Well, what would you think is additionally important?
Yes, I completely agree. Also, what Santiago said before, in the end, it is about finding the first investment. And it's like I always say, 90% of my time fundraising is like asking for commitments, and then you get the first commitments, and then all the other ones come in the next 2 weeks or so. And EquityPitcher is a really, really good name, strong reputation when it comes to the Swiss VC world. That helps a lot with follow-on investors, finding trust, finding new investors, getting interest to new investors and VCs as well. It's not only about the reputation, it's also about do they have a network for investors. So that's pre-funding, very important, but also post-funding. The network for intros, for sales partnerships, especially when it comes to B2B or B2B2C companies. The intro, the network, and the reputation and the name, that's really important. Of course, besides the funds, which is, without that, we can't work. So, totally agree.
And then, I mean, we always talk about, we bring so much value apart from just the money. What is your experience been, maybe not only with us, but just in general with VCs? How important do you value that?
Absolutely, especially when you're within a specific country market. For our startup, it is the Swiss market at the moment. It really helps to have the network of the Swiss investors. For us, it is you guys. You have a really broad network, and what's really really attractive for the startups is that you make it accessible for the startups. You have a whole structure of how to access the specific support you need and how you can get it, and then you get the intros to the specific person, and they talk to you and they help you and they support. I think that's really important. And besides that, we also have a lot of private investors on the cap table from the earlier stages, earlier rounds, and many of them coming from the insurance industry, which is also, regarding the network, really, really helpful. But besides that, besides the funds and the network and the reputation, I think what's also really helpful to have the understanding of a VC, how or what's the best for the company. And not only I have my VC view and I have to get the growth, and that's the metrics I need to tackle, and then it's okay, but also to get the understanding what it needs, what's maybe asking the important questions, maybe also the uncomfortable questions, but in a way of how can we bring the startup further. And that's really helpful when you have former or still entrepreneurs or people who have also founded companies themselves and then being VCs. That's a big difference compared to when you talk to VCs that just come from the VC side or the PE side or whatever. So I think having the direct line to the partners, to the investment managers who have the understanding of what it takes to build and grow a company, that's really, really helpful.
I think we transition to the Q&A directly.
Very nice. Okay, are there any questions?
Question to Anina. Can you share with us your moment of doubt with EquityPitcher since your first journey? Thank you.
Good question. I think there was not a moment of doubt. It was in the middle of a...
You can be honest.
No, really not. I mean, I was the investment manager. She did the due diligence and she closed it, and we closed the deal and everything. And then quite close after that, she left the company. Maybe that was a bit of a sad moment because we really had a good connection. And it's like Marco said, it's for me, and I think for a lot of investors too, it's about people. You get to know each other. They understand the company. They understand how the team works. And then it's always a bit sad if someone leaves. But besides that, I really can't say anything bad about it. There was no doubt. We wanted the money and we wanted EquityPitcher.
And now I'm her successor and you have to deal with me.
Yes, that's fine too.
Another question. Please.
Another question. How do you maintain the relationship continuously, knowing that you have to focus on your business, and Marco, you have as well your existing portfolio companies? Like, what do you do, guys, together to make sure you keep nurturing this relationship? Thank you.
So what we do from our side with all investors, we send out monthly newsletters with the figures and the actual, the most recent updates and the numbers, figures. We have one of the partners as an observer in the board as well, and we do have quite regularly we have board meetings, so there is, from a strategic point of view, also a lot of insight from EquityPitcher side. And besides that, we have like reportings, we catch up through calls, events and so on. Anything to add?
Just maybe that our philosophy is also not to bother the founders too much, right? So we don't want to ask unnecessary questions, ask for unnecessary reporting, and check in too often. So I think not doing harm is already also sometimes a positive trait.
Okay. So if there are no further questions, I would like to thank Marco and Anina for their insights. And we welcome on stage our third pairing, which is Pascal Mathis. He is the partner at Founderful, and Gianredo Porta, who is founder and CEO of Norm. Its time starts now.
Perfect. Thank you very much. So as this is a reverse pitching session, Pascal, if you would have to pitch Founderful to a founder in 1 to 2 minutes, what would you say?
Thank you for this great question. Good morning, everybody. So 6 years ago, before we started Founderful, Switzerland was not on the startup map. I know, especially at startup days, we always clap our backs. Switzerland is great. We are innovation, world leader with IP, patents per capita, etc., etc. But if you would talk to somebody in the US or even Europe, the best funds would not look at Switzerland. And this is what we try to change. And if you take one thing from our little session, I think we should try to play Champions League or in the Champions League. And this is, we have the talent here. We have everything in the country which is needed to play in the Champions League, to be on the startup map. And we try to do our part to enable this and play in Champions League.
This sounds great. But for me, this was more of an LP pitch than a pitch for me as a startup. So if I'm looking for money, like, why should I come to you?
Yeah, Anina actually did my pitch. Where is she? She really put it so nicely. Our hypothesis is, obviously, we are all founders. All of our team, our 9 team members have worked in startups or founded startups. We think operators are better investors than pure financial investors.
I fully agree there. And this was also for us one of the main things we were looking for, people that already founded companies that know exactly what it takes to make a company successful, and also the setbacks that are part of the journey. So that's for sure one. Another important topic for me as a founder is like the relationship with the VC, that the relationship is really trustful and long term. So like, how would you assess if you have a good relationship with the founders of your portfolio company?
Again, really good question. This is actually the number one goal I try to reach with the founder, and it's trust. It's so, even when at Get Your Guide, we always sold the story a little bit to our board members and investors, and this is already where the trust starts to end. So ideally, we have full level of trust, and whenever something is going wrong, they would tell me immediately, and we would have time to solve it. What happens if I really mismanage the relationship? Then 2 weeks before breakdown, I get a call, and the lights are almost off, and we don't have time to work on it. So I try to be on eye level. That's also why you ask questions to me. Now it's this trust, which is it's so easy to say, but to lose trust is done with one action. For instance, once I put a PR article about something the founder didn't want to go public with, and this hurt the relationship. So for 1 year, I really had to be a good investor again. And after 1 year, I thought, yeah, now the relationship is established. So yeah, work on this trust thing. And this is in every single interaction, you have to work on this trust level.
And it's not always that like your responsibility as a fund manager are 100% aligned with the founders, and that's not a Founderful thing. That's just a generic thing in the industry. So how do you navigate that when it's like the things that you should do? Let's say how much time you should invest with a startup, right? If you look at your LPs, then they say, please invest the time with your top startups and just forget about the others, right? But if it's about trusting relationship and long-term relationship and long-term brand name for your fund, probably it's a bit of a different thing.
A very tough one. I'm sure you're all familiar with the venture game. We do 40 investments per fund, and only the top 5. So, for instance, Norm, they will push our multiple or the returns, and the lower half, for instance, you should not even spend time with. And even worse, the ones struggling, they shout the most. So you, as a fund manager, tend to spend even more time with these. Yeah, it's actually a daily struggle. We try to have buckets. So for instance, the ones going really well, they get a bit more of our head of talent, head of finance, head of legal services. And the ones going not so well, they are in a more reactive bucket. But we would never tell this outside. We would not tell you in which bucket Norm is, for instance.
Good. Okay, and then one last point from me that you did not mention, but what I really value about Founderful is that you guys really create your own thesis about to invest or not, and then you say yes or no. And it's not about, and I see this with many other investors, it's about looking what the other investors are doing. And if the others say yes, then I'm in, and if not, they're not. And I think for a strong ecosystem, we need more investors like you that have a thesis, look at the startup, and decide yes or no.
So, do we have any questions for these two? Yes.
Thank you, guys. Pascal, you mentioned Champions Leagues, I think the Swiss market, which I totally agree with you. Would love to hear your thoughts, like how we can create a powerhouse, knowing there is a lot of, maybe not a lot, limited number of VC focusing exclusively on the Swiss market. What will be your vision to create a powerhouse? Thank you.
Well, the vision, I can tell you our approach. As mentioned, the talent is really here. So I'm now saying ETHs, but I mean every institution. We attract so many great talent into the country, and this whole VC game I also had to learn, but it's a lot about branding and network. So what we work behind the scenes a lot, and many of the other funds do too, but we have connections to the best funds in the world, hopefully. And then if I send a deal to a fund manager I know personally and have drank in a coffee with, then the chance that she invests is much higher. It should not be the case. It should be exactly as John says. They should have their hypothesis. But if they believe that we are a good fund, they invest more easy in our portfolio companies. And this is what we try to do, build the bridges to the AAA funds of the world. And by this, doing some nice IPOs and exits. And then by default, we are a startup nation.
Coming back to the yes and no decision, Pascal, this is one for you. So when you said no to a startup, how hard is it, or what does it need for you to get back to them at some point?
Can you refer, like the last sentence? I did not get.
So what does it need? What do you need to see from a startup to reconsider you know?
Okay. Yeah, this is the worst part about my job. We look at 1,200 deals. And max 10 I can do. So I'm saying constantly no to really, really good people. And hey, sometimes we are even wrong. And then this is interesting. We just yesterday talked about this. Should we even reconsider a deal? Because it really goes back to what John said. We are open, and then we take a decision, and then it's actually pretty firm. But there is two options how a startup can go back. So sometimes there is a good, like they can only come back if they are stellar founders. This is point one. But if they are maybe missing a sales skill or one skill which we would like to see in the team, we would tell them, hey, in our opinion, you're missing a sales DNA. If they come back and bring in a third person or fourth person with the sales, then we reconsider. And the other thing is if they are just working on something we consider stupid, we tell them, we like you as a team. If you pivot slightly, maybe we can reconsider.
Cool. Thank you both so much for your insights and for the interview. And now we're coming to our fourth pairing already. And it's our number one question asker of the room. It's George Kneiser. He is a founder, and I like this title, Chief Vision Officer at Qubit Capital. And with him is Aziz Bekiria, co-founder and CEO of, is it DeFi or is it Delta Phi? DeFi Space. Please.
Thank you. Hi, good morning. George Kneiser, founder of Qubit. So quickly, Qubit Capital, we are an early stage venture focused exclusively on the Swiss market. We do R&D, pre-seed, seed, and Series A. Series A mainly as a follow-on. And unlike Pascal and Santiago, our relationship, we were not impressed by DeFi teams when we met 2 years back.
That's a fact.
Yeah. But we managed to build very long relationship, and it led us to lead the latest round a couple of months back.
Yeah, no, that was pretty exciting. But I can tell you, the first meeting with Qubit was not that exciting when it comes to pitching, because it was a learning curve for us. Okay, fundraising was hard. It was the first time. I was just out of university, so I can tell you I was not the best pitcher, and I'm not. But things have improved a lot. So we met. I think more than a year ago. It was Investor Day from last year. We met George. It was very educated questions that we got, so that I appreciate so much. I usually hate these investor pitches where we have to repeat our pitch and go through our slides deck. And so in here, it was actually interesting because it felt that you've done your homework, so that was good. But then afterwards, when the whole team jumped into a call, that was not that good. That was actually one thing that was a very good green flag that we had when working with Qubit. Because when you see people changing their mind along the process, there's definitely a reason. One of the reasons we had here is that the business case that we have been proposing was evolving from just pure slides into an actual thing. So just to remind you a bit what we do at DeFi, we build satellites. So it's actual rocket science, and it's hard to do. Which actually makes us look like BS when we are first presenting the business case, and then people start having some doubts whether or not we're going to deliver. And so one of the interesting things with Qubit was that I've been seeing George in mostly all the events that I've been attending, so I think this is where you got to build your opinion slowly about us. I'm pitching in PFL, and George is in the team. I'm pitching somewhere else in SIGTech, and George is there as well. So that was a good signal, because someone is following you, someone is building a very wise opinion about your business. And afterwards, actually, it was in this very room where we pitched for SIGTech last year in Startup Days. And this is where it was like the beginning. This is where everything started with the team and the actual due diligence started. And that actually didn't take so much time. So one thing I'm super grateful from your due diligence was all the reports that we got from you. So that was approximately 20K equivalent of industry reports, which was very cool. And from then, there we are. You led the team, and you led the lead, and we got an oversubscribed round, so pretty helpful for that. But anyway, what impressed you about DeFi the most?
I think the reason why we take a long time, and I think you mentioned trust, but for us, really building relationship with founders, but relationship more to understand how they address feedback. So we're very, very proactive. We decided at Qubit to focus more a very, very limited portfolio companies. It's a very high risk, early stage. Simply, we decided kind of to own our destiny. We still need to prove this system will work out over time, but that's the strategy of Qubit. So we give a lot of feedback. We engage a lot of stakeholder expert in meeting with the founders over a long journey. It took us, I would say, more than 12 months back and forth, report, and seeing how they address every feedback. We give a lot of attention when we give feedback to founders. Most of the time, you meet them again and nothing been done. And I think with DeFi Space, literally they addressed almost every point. So that was a very important point for us to get to know them and rely on the future. And that's the reason why, of course, we got excited. The team was outstanding. Of course, we have to understand the space. So we took a lot of time. We engaged experts to understand the opportunity, the challenge. And that's what really the back and forth that we got with the team. So definitely, I think, really, I would say, how they listen to feedback, how they address feedback, and how it come back to you. And this back and forth was very, very valuable for us.
And if I can add, there's one thing that's also important for the founders here in the room. We were promising a lot of stuff in the beginning. That was our pitch deck. Of course, we're trying to sell going beyond the moon, going to Mars. But there's also the fact about all these intermediate steps that you have to deliver while you are meeting the investors and trying to nurture the relationship. It goes the same in sales, by the way. It's the same thing. We try to make sure that everything we show you on a slide was actually delivered by the time we were doing our due diligence and forward. So the business kept running. We were telling them exciting stuff, and in the next meeting we show up with results about that. So whether it's tests, hardware that is being built, customers that are being closed, all of that was delivered. And I think that's also a very good signal where if you are seeing things are evolving in the right way, that means that you are de-risking already the investment before actually giving us the money. But now we're in space already, so you should be happy about that.
Yeah, absolutely. we're absolutely very excited. And I think we leverage our network. I would say 25% of our LP based in California, 25% UK, Germany, Austria, 25% Asia, Middle East, and 25% are Swiss investors. So we leverage our network as well to really understand where potentially we can add value on every specific portfolio company. So that's why we have limited number of portfolio companies, and therefore we want to make sure we can add value from our investor network. Thank you.
Very nice. Thank you too. Are there any questions?
So you spoke a lot about giving productive feedback to your founders, but I was wondering if once you've started the relationship, if there's a way that you help them foster their own method of questioning their work kind of as a proxy, like a method, and if there are any questions that you ask them to contemplate throughout their work proactively.
Thank you, Arijana. Yes, absolutely. I think my experience, you have two styles of, I think, investors. Some, they just listen how the founders are asking questions, they go back to the office, I don't like their question, is done. Or you engage with them. And I know some founders, they do not like that, but we went into this direction, driving the question in a different way, we have strong view on certain things. And the reason why, as well, we have short portfolio companies, because we develop and we build a strong view on our strategy. So we are happy as well to push a little bit, like as well. And like, I think, EquityPitcher, you don't like to, put a lot of pressure on founders. We like to put some pressure. We like sometimes to, not in a negative way, but I think we like to push them sometimes and challenge them on question. Like, if they just want to follow what you're saying, it's another red flag. So we like to challenge them. And recently we had a portfolio company, it's a spin-off here from ETH. We challenged them a lot on the market, like very strong view, and they kept pushing back, no, that's the way to do it. And we might close on the deal now with them. So I think we are quite engaged on both sides.
A question for George. You said you take a lot of time and do a thorough due diligence. How do you balance that with danger that you lose hot deals to other investors?
It's a very good question, and that's the nature of our business. We lost deals, and we didn't want it to fight, or I think, and I spoke maybe briefly with Pascal, and the reason I asked about like how we can build a powerhouse in the Swiss market, it's a continuous risk, and we are ready to take it. And as I said, we lost deals. We don't want to fight. We don't want to overprice. It is what it is. Sometimes you have to be faster to take a decision. We got some amazing startups. They are really doing amazingly well, and they put us on a fait accompli. Like either you take a decision now. We didn't want not to respect our process, and we told them we wish you all the best, and we keep tracking them. But we are ready. We're happy now, but we're ready to lose some deals. But this is a fact. Yeah.
That's perfect timing. Thank you, George. Thank you, Aziz. And we will close with our last pairing. I think you're now already two. Perfect. So please welcome Mike Neff, founding partner at Übermorgen Ventures, together with Fred Fournier, CEO and co-founder at Open Forest Protocol.
Thank you. Good morning. We're Übermorgen Ventures. We invest in climate tech in the pre-seed and seed stages, couple of 100K initially in Europe mostly, but elsewhere also as an exception. We've done 35-ish investments so far based out of Zurich. I think what makes us stand out is, first of all, we've done it before. I personally am a founder of Doodle, so I know how to build products. I've invested in maybe 50 companies privately, so I know how to invest in companies and work with founders, co-founded a number of them. That's one thing. Another one is we're evergreen, so we don't have the usual fund cycles that normal classic funds have, which make us a little bit more relaxed as to what the perspective is with a company in terms of exit and liquidity event on the timeline. These are maybe two things that stand out. Also, we're maybe the first fund in Europe that in this second kind of climate wave after the clean tech wave around the 2000s that embarked on this topic. And Fred and OFP is one of our investments. Please, Fred.
Thank you, Mike. So at OFP, we have built a digital standard for reforestation projects with a very strong MRV, monitoring, reporting, and verification system with data flows that are coming from the ground and verified, and then asset issuance. I met Mike at the beginning of my journey, or almost at the beginning of my journey. We met in person because, he showed interest. He was asking a lot of questions. And I think that was, from my perspective, something that I really liked, because by asking questions, we started a discussion. And the discussion eventually ended up in, on my side at least, thinking about the questions he was asking, and not just answering straight away, but rethinking about a few things that we've been thinking about internally. But he was somehow challenging them in a nice way, and I think that has been basically the basis of the relationship from the beginning, where we still have that. I think it's really constructive, and this kind of discussion, which is based on questions coming from his side mostly, but also from my side, time to time, is really essential in what we do.
Yeah, I think what I think is noteworthy with Open Forest Protocol is we're flexible enough to make these kinds of investments as well. You started out as a token play in the crypto space, very much in that space, and now changed to a more equity play, and we're comfortable in both of these worlds, and I think we're instrumental in bringing together different target audiences that maybe sometimes have a hard time to talk to each other, and I think that was useful, and I think what's really interesting about OFP is that it's one of the rare cases where crypto and blockchain primitives are used to induce change in real world assets and the real world, and bringing communities together to work together for a greater good.
Yeah, exactly. And I think you've been really helpful, and you and your team, on us thinking about how to transition from building something from the blockchain angle with a very tech aspect, so building an engine that most people don't understand still yet, but is working and is useful, to something that is more, I wouldn't say mainstream, but more climate tech oriented, where people see not the engine, but the car going from X to Z and what it does and how it does it. And I think for us anyway, navigating that space, which is difficult in between two kind of markets and industries, was really, really helpful, mostly on structuring the last round in transitioning, as you said, as an equity round. That was you were basically instrumental to that.
Mm-hmm. And now that you're talking, I also have to think, because you mentioned that before, this thesis-driven approach to investing, and I think OFP is also an example for that, because the investment there was very much thesis-driven as well, and it speaks to my heart, because it's one of the cases where I think, like, this is something I want to see in the world, and I want this experiment to happen to see whether it works and whether it works out, and that's also a good basis. There's always good times and bad times, and you had hard times as well with like crypto winter and nature-based assets under pressure and all of that. But it helps. So the more thesis-driven an investment is, the easier it is to stick through the hard times as well and try to make it happen.
Yes, totally agree. And I think where we find ourselves too is finding, the balance between sometimes very long, investors that are looking at it very long time versus investors that are short-term oriented. And this is also, for us as startups, maybe a few of you in the room too, are finding it difficult. And I think you've understand that we might be slightly longer term than others, and you've taken the risk, and you've stepped up for that. So yeah, it's been an interesting journey. Thank you.
Thank you.
This is your last chance to ask any questions for this session. Yes.
Question to Fred. I'm sure they hammered you in their due diligence to get the decision taken. What type of due diligence you've done on Morgan, and what really excited you? Thank you.
Thank you for the question. So the due diligence, yes, we did the first due diligence, or serious due diligence with them, and then with another VC based in Bern, I'd say, and then with a few other VCs in the US. But I'd say the two ones that were, like, from my perspective, very serious and in depth were their due diligence and this other VC from Switzerland. I think they were more going more in depth, and this was really helpful for us to reconsider things, or to just think about things we haven't thought before.
To both of you, actually. I heard that you mentioned that you are maybe more of a long-term startup for investment. How did you manage those timelines with the usual time frame of a fund? And how do you manage your fund with those questions? Of course, with climate, the timeline are much longer than other startups. So how did you tackle this, and how does the fund work?
So for us, this circles back to the evergreen aspect that I mentioned. So we have one entity we invest out of, with no definite timeline as to when it gets liquidated. And that makes us more flexible. So we try to balance things in our portfolio, have a couple of short-term plays, hopefully, and a number of long-term plays, so this kind of evens out in the end. So it's mostly a portfolio building perspective for us.
Well, the short answer is that you struggle a bit more when you talk to VC. That's the case. You have to make your point on why it's still interesting for slightly longer term. And I think one of the interesting aspect here is that it's sticky. What I mean by sticky is that when we onboard clients, it's going to be for 40 years. That's we're looking very long for long time frames, meaning that the revenue is going to also link to that. Of course, for some VCs, it doesn't work at all. But still, you have to balance. And in the last raise, we also have some foundations who actually invested. So it's trying to find the right people and the right balance.
Thank you very much. Work? Yeah. To piggyback on this question as well, maybe to open it also to the other investors that today presented. Obviously, you mentioned that this venture is a little bit more long-term, which kind of falls in line also with, for example, biotech and life science industry. Maybe to the investors that are interested in biotech, how do they look and kind of invest differently, perhaps in the life sciences and other tech startups that are obviously a little bit different in terms of timelines of getting to the market or to the exit, let's say?
Not sure if I can comment to that. Can you rephrase your question?
Sure. So obviously, as Fred here, there's a startup that has a little bit longer timeline and it's a longer term investment. In similar way, also biotech and life sciences are, because their regulatory landscape is the industry is very regulated, right? How do you look at the companies that come from the biotech space in terms of investments, and do you follow them for long period, or do you not look? I suppose that you don't look at the biotech startups, but maybe that's why I wanted to open it to other investors in the room that are looking at life science companies.
So maybe what I can comment there, not sure whether it's helpful as an answer, but what I can comment there, we also look at biotech every now and again because it has important aspects with regard to climate. And the longer a company needs to get to a meaningful value and where we see an exit window happening, the more intense, obviously, the discussion will be around, will it be able to finance its way through all these stages? What will be the means of financing? What are the envisioned valuations and potential investors? What need to be the goals to be achieved for each financing round? And in those cases, I want to have a much, much more detailed answer than maybe in other cases. And if a founding team only looks ahead one financing round, that's a clear showstopper in such cases.
Very nice. Mike, Fred, thank you so much for your insights.
Thank you.
And that's already it. That was quite a ride. I thank you all. I thank our presenters, for our 10 presenters, for giving their insights and sharing their experiences with the audience, which was very active. Thank you for this as well. If you like the session, you have the chance now. After the break, you have 25 minutes at 11:00. We have the second round of reverse pitching exactly in the same room here, so you can come again. We have 4 more pitches to hear there. And I wish you a nice startup days. Thank you.